Today is Thursday, March the 6th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are looking at the ES. I'm going to go to the weekly. Side note, thank you to everyone for the well-wishing, the prayers, the thoughts. Totally appreciated. My husband made it out of the surgery very well, and now we just get to see the next discovery phase. Because as many of you know, he is very healthy, very fit, and to have a heart event like that was pretty shocking. So the doctors are still trying to figure out what's going on. All right, that being said, let's jump into the weeklies and see what the traders have been trying to do all week. Come into the low, buyers defending. That is day after day, the deep dips get bought. So where are we likely headed with the non-farm payroll that is going to come tomorrow? Well, here's the thing. What we know is that it's very likely that any kind of big bounce that we get is going to sell. Why? Let's go to the daily. Answer that question very simply. Remember, traders, those of us that have been around a really long time, we're simpletons. We will buy support and sell resistance in the direction of trend. And this is downward motion, under the 50, trying to hold the 200. So big reflexive bounces are likely to meet sellers because we simply cannot hold a bid here, folks. There's a lot of negative thought process going on about what's happening. And so essentially for the last 2 days, starting the third day here, we are in a series of inside candlesticks. The candlestick in charge right now is the candlestick of March 4. And that candlestick is giving us a support edge at 57.44, right? And a resistance edge at around 58.80. What should we see today? We've got jobless claims coming in at 8:30. Whichever way it goes, deep dips, you're going to find buyers. Big spikes, you're going to find sellers because the broad market is still in flux and they are trying to defend an upward 200 while being under a 50 that is now starting to slope downward. This tells me that traders are skittish, and so they're going to sell those bounces. They are, right? So let's take a look at the go, no-go lines today for the ES. Wow, that seems so noisy. What can I take off? I'm going to, what do I want to do? No, I'll leave it there. Today, I'm just thinking about less clutter. So what are we looking at? Here's our hourly chart. We've been building a small balance area around the region between 57.75 and 5800. So about 25 points wide. Every time we've come into 57.97, we found sellers, but buyers are trying to hold us between 57.76 and, 57.70. That's sort of where we're going to be looking for today. What's happening with the Keltner band? This looks like a downward slope Keltner band, but here's a low, here's a higher low, and potentially here's another higher low. Okay? What's happening? Price 58.50. A lot of sellers up there. Look at the hourly candlestick formation. We have dropped below the low of that hourly candlestick formation, and we have stayed there essentially. Okay, so the line in the sand for where resistance ought to come in and sellers really ought to find the big hammer blow for themselves. Buyers going to get into trouble up here. It's that 58.50. If we bounce into 58.50, the seller is going to be ready to go, and they're going to collapse us into the downward formations. Because I believe this market is trying to figure out what's going on in the bottom here, the bounces remain sell zones. We're under a very tight moving average that is downward sloping, under the VWAP, downward sloping, under the 50, downward sloping. Momentum, a little bit flat. So what does that mean? You're going to have candlesticks that retrace each other. Absolutely. Anytime we have a cross current of any kind, we're going to have candlesticks that retrace each other. Wait for the line in the sand and then go after the long, right? If you want to take the bounce action event here at 57.76, your stop 3 points wide, use a micro. It'll help you figure out what's going on and then, follow along. I believe the reflexive action is going to keep us in this range potentially until non-farm payroll. If we have savage moves out, buyers will step in. If we have savage moves out to the upside, sellers also going to move in. Let's take a look at the NQ. That went kind of long. Sorry about that. Using too many words. All right, let's take a look. Here we have the formation. What's happening? Traders trying to bounce off the 50 on the weekly and the base of all of this heavy congestion. Buyers came in here. There were no sellers sitting under here. How do you know that? Because the candles aren't printing there. So the buyers continue to come in on the dips, but we are selling those bounces. So let's go to the daily, see what happened yesterday. Look at this inside candlestick. People waiting for the non-farm payroll. That seems very logical to me. 20,700 also gave us the sell zone yesterday. Today, we've got ourselves a fade. Here's that probe down into these levels. The 200 still sloping upward. Momentum steeply downward. Let the chart find the floor before you decide that you're going to buy the dip. Or if you've been looking at trend and you've said, all right, I'm going to sell the bounces. Look at this opening candlestick formation up here. We're going to move that to 650-ish. That's the new high for them, for the traders in the NQ to fight about. And then the real breakdown began at the loss of this 589 area, right? So where are we headed? Look at the hourly formation. This is a balance area, right? Trend tells us that sellers are waiting at the top of that balance zone. And now, what are we trying to do? Find a buyer. So what are they going to do? They're going to say, all right, let's see if the sellers are still there. They're going to try and price probe down, just like this. Price probe down, and then if it holds, buyers come in. If it doesn't hold, more sellers pile on. What are we waiting for? My thought, look at this. Low, higher low. I would suspect we defend the 250 area. 250 to 277. 20,250 to 20,277. Do you see them coming in? They're trying to buy it here. They are trying to put in a floor there. The pressure event, however, is still downside. So my thought is, listen, wait for the bounce. I know. Break out the knitting needles. Watch your favorite show. Read your Bible. Whatever. Wait for the price action into trend and then watch it reject the area and take the short. If you want to take the bounce here, remember, the buyers in this market have been quick strike in and out. They are not holding for reflexive motion at all. Now, yesterday, we saw that reflexive motion pick up. Why? Because what did we do? We failed to hold lower. We bounced through resistance. Look, 1, 2, 3 areas of resistance, pulled back to the most prevalent area of support, and then it moved up again. You could see this on a 15-minute candlestick formation very nicely to trade. Where should your eyeballs have been in the first place? Way down here to watch for the buyers turning around and lifting us off of these key weekly levels. That's what they're trying to do. They're trying to hold the floors. All right, let's go to the YM. Still in the range. What was my thought? You know, I talked about it at the beginning of the week. I said, hey, I think we go to 42,000. Where are we headed? Lower lows. The 50 is way down here. So even 41,500 might be the next line in the sand. But this clearly is the balance zone. Clearly the balance zone. Bounces have been sell zones. We've been retracing a lot of the candlestick formations. Now, could the traders come in and front run this price and have it move Way up. Yes. On the daily, are we making higher lows? Yes, they're trying to defend these weekly lines. But we're also making lower highs. And so the bounce events are going to keep us on the side of the trade that is sitting in trend. Look at how long we've been sitting down here. Doesn't mean that we won't stay down here, right? But we've sitting here a long while. Deep dips going to be buy zones. What am I looking for? I'd love to see 42,000 in here. I'm going to try and frame out something to put in a swing long in that zone. If it holds, and it's going to start in my mind as a swing long, but if I can't continually begin to pace out higher highs and higher lows, I'm out, right? I've got to get above these downward sloping moving averages, or every bounce is going to continue to get sold. All right, if we go to the hourly chart, what are our go, no-go lines? Look at this frame. Ooh, that looks pretty good. I'm going to delete this drawing. Oh, for goodness sakes. Right, and here we are. Okay, 42,470. Here's something else you could do. Let's say we get a reflexive motion over the next couple of days. It just collapses down into 42. We're going to see buyers there. You just got to wait for them. Let them tell you what you're doing. And if your trend is down and you take a bounce, don't hold it for whatever it is that you think you're holding it for. Go to the next line of resistance and go, I better take some profit. Because trend is going to remain master and commander. Are they trying to bounce off the lines here? Yes, they are. They're trying to hold the floor into the jobless claims on the horizon. I would not trade into that number unless you got a wishing order way down here at 42,000 or a wishing order way up here at 43,200. Other than that, wait for them to come in, make the move, and then follow after the fact. Let's take a look at Micron Bitcoin. Chart did a great job coming into 95,000, but guess what? Rejected it. Rejected it. So what's likely to happen? Well, remember, this is following the cues. And so the cues are making higher lows, trying to hold the floor on the weekly formation. There is a gap event sitting here at 80,000 and another event at 74,000. This is where I think we ultimately go. What's going on with the Keltner bands? They're broadening, right? Expanding on both directions. What that tells us is volatility is expanding, and so prices can expand very nicely. But what are we looking at? What is the slope of trend? It's down. What's the slope of momentum? It's down. So the bounces are going to give us sell zones. The market is too nervous about a buy and hold event in the current climate. They are way too nervous. They are not willing to give anything benefit of the doubt. So what do we need to hold today? 90,000. If we hold 90,000 today, we're going to head back up to 96, maybe even 98. If we lose 90,000, we are very likely headed back to 80,000 as we try to chop through this space. Notice, this is the balance area, right? It is, 15,000 points wide, right? So it's 7.5 below, which is right around our support floor, right? Or all the way down into 75, right? But that's one balance area. If we multiply it out, we get down into the 74 zone. I still think we get there. But we're sitting in this heavy congestion, and if we hold, we could easily get back up here. What am I looking for? I want to look for the failure on the week of 96,000. If it holds, I'm going to go back in short. If it doesn't, it's going to move to the top again. And I am not chasing this. I absolutely am not chasing it. All right, let's go to oil. So what do we have going? Listen, oil is headed lower. Administration came out last night and said, hey, we're going to try and attack inflation using the oil input, and that is going to give us $50 a barrel. That's what they're thinking, right? So Now, people aren't just going to listen to administration and go, oh, okay, well, whatever. They are going to do what they think the chart is telling them. And what the chart is telling them is on the weekly formation, buyers are sitting here at 65. Here's the thing. Drillers don't like to spend cash unless they're going to make cash. And net returns are going to diminish the lower the output gets, right? We're going to chase, that's the free hand of economics. Wherever the money is, we're chasing it there. And so I'm not sure what's going to happen here. My thought is that there's a natural floor under here, but it could be forced. And so the bounces are going to be sell zones. Here is downward sloping formation, downward sloping 50, downward sloping VWAP, downward sloping momentum. Bounces are sell zones. And last night was just all she wrote right there, right? They were like, oh, let's just sell it. And buyers coming in where? Wouldn't you know it? It's our 6660 line. I'm going to redraw that one at 6630. If we lose 6630, we're headed to 6520. What an interesting momentum event from a Keltner band, though. Flattening out very quickly on the daily. Upside still down. So reflexive motion. Very likely to come in here. Sellers going to get caught flat-footed. And then brand new sellers are going to come in at the break of this balance zone at around 68.50, right? So how wide is this range? Let's say it's $2 wide. That's 68.50. That means 66.50. Oh, shock. There you know. There it is. Trying to hold that balance zone. I think the shorts get shellacked. If we get up over this edge, it could easily run for a couple of bucks and just shake the trees like nobody's business. All right, gold. Dollar falling off cliff. Gold still caught in the range, but bouncing, right? I mean, take a look at this weekly. I mean, sleepy chart. Absolutely sleepy right now. Going on 1, 2, 3, 4, 5 weeks of sideways motion. 5 weeks of a move is coming, folks. A big move is coming, right? Where? I don't know. I'm going to guess up, but it could be down. So what is the thought? If it comes into 28.50, it's a buy zone. If it loses that, you only need about 5 points of risk. I would do a micro there, 5 points of risk, and wait for that reflexive bounce. Look at it. It's sitting in a balance zone, right? Sellers at the top, buyers below, trying to hold the edge. So could it be that it won't come into 28.50 again? It might just come into 28.70, potentially, but those are the places you want to set your alerts, okay? And until then, it is what it is. Sideways on the hourly chart, you can see a lot of noise. Here's a big balance area, right? And that zone is 13, it's about 25 points wide, right? So if we lose this and go 25 points down, it's going to take us into, I don't know, 28.90, something like that, right? And so that is essentially what I'm seeing. Look at this, a flat 200, flat to downward 5, downward VWAP, underneath the 50. This is a mosh pit, right? So the edges are where you want to participate. The edges will give you your most reliable risk to reward formations. And the SPY, trying to hold the balance zone, right? Where is that area? We've lost, let's see. Let's use this one, right? 574 bounce. Here's the low. 583 resistance. We're battling there right now, right? What do we notice the traders have been doing? They've been selling the highs, and they've been covering on the lows and trying to reverse the trade, moving from resistance to support back to resistance. I was listening to JJ this morning. He's like, yeah, you know, we're like a washing machine. It's absolutely true. It is. We're we're on a washing machine cycle for sure. Let me remove that line. All right, so what's the trend telling us? Here's the 200. Look at the wicks. Deep dips, still going to be buying opportunities. This chart is not falling away yet. Nothing is doing that. Are we trying to recapture the floor of support at around 575? Yes, we are. We absolutely are. So what does that mean? If we hold this zone and we don't break below 575, we are going to try and get back into the old balance zone that we sat in for about 5 days, and that is up above 584. I think that is the number that I want to look at. Inside candlesticks. So what does that mean? Deep dips, going to punch back into the edge of the candlestick and then give us real direction, or vice versa on the upside, or it still sits in here and waits for tomorrow's real NFP number. All right? Messy today, as it's been all week. We don't fret about markets doing this sort of thing, okay? Charts have to come in. And when they come in, they give us opportunities to bounce. It just feels kind of yucky in the beginning. And so where's the floor? It's still 485 in the Qs. What are they trying to do? Hold above 496. Really, they want to get above the close of last week, which is 507, 508. All right? That's what they're trying to recover. But what's been happening? Every bounce has been a sell zone. And when the bounces on those sell zones arrive, people are selling them. They're continuing to sell them. Notice a lot of noise at 500. Not a good area to take a trade. Let it expand. And here is the Fibonacci I want to look at. I want to look at that candle. Okay? Look at that. That candle right there from March 3rd, it's bounced in the 50% range 2 days in a row and given it up. So what's it likely to do? Try it again. Why? Because we're making higher lows. So deep dips, buy zones into 503, 504, and then you get out of the trade. All right? Okay, everybody, that's it for me. We'll have our regular meeting tomorrow, and I look forward to connecting with many of you. I'll be on Top Step TV a lot of the day today, and I look forward to connecting. All right? See you guys later. Bye-bye.